All right, here we go. Here we go. Here we go. Ready to get started. I hope everybody's doing very well. Let's go ahead and get. I got one more thing that I have to be able to do, and then after that, we're going to get started from there. And that is make sure that the people on Instagram can be able to see me, and then after that, we'll go ahead and go from there. So let's see. You are on. Drop a comment inside of the comment section. Make sure that you end up saying, "Hey, hopefully everybody's doing very well." And we'll get ready to get started on this last day of September. You're right. It would be nice if I turn my camera around. There we go. All right, and we are live. This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. This is another session with Trade with Travis on YouTube. This is another session of basically Carter Cow trading on Facebook. So I hope everybody's doing very well. Let's go ahead and go through the disclaimer. I'm not a CPA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision about what you want to be able to do for Forex trading. I understand that Forex involves risk. It involves risk of being able to make money. It also involves risk of being able to lose money. So please keep that in mind. You understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So get ready. Showing myself on the screen. Hopefully everybody's doing very well. Hopefully everybody's had a great month when it comes down to trading. I know that we have had a great month when it came down to trading overall. I know net profit wise, we're up, I want to say right around 3 to 4 grand. So it's good to be able to end out the month right where we thought we were going to end up being. But it's definitely going into October and going into trending season. We want to be able to make sure that we match how well we end up doing from there. If you are live, just make sure you drop a comment. Make sure that you end up saying, hey, overall. And like always, while you're actually on, make sure that you share the video to someone that you think that may end up liking this video. I am a little bit late. I do apologize. I wanted to make sure some stuff was right on the YouTube end, but other than that, let's go ahead and get started. So we had the debate last night for how well or how bad it ended up going. We didn't see that much movement. So a couple things are coming out today. Today is a fundamentals day overall, and what I mean by that, is that we have a lot of stuff that's going to certain pairs. We need to pay attention to how that movement is going to end up reacting to the market, and then after that, trading from there. Remember, I've kind of taken the liberty to kind of step back when it comes down to trading this week, because I'm more interested in being able to see how the U.S. dollar is going to end up faring, because I would like to be able to buy the dollar based off of the movement or what's going to end up happening projected this month, instead of trying to trade against it. So I'm still trying to wait on the position to be able to go in from there. But overall, let's take a look at it. Retail sales end up coming out. They actually end up being negative for the Eurozone. You take a look at the GDP for the pound. It actually was better than what it was, but it's still at a negative rate. Unemployment rate actually was better when it came down to the Eurozone as well in Germany. And what we're expecting a little bit later on, we're going to expect some unemployment change. We're going to end up seeing GDP annualized. And then after that, a little bit later on today, we're going to end up having a leader summit that's going to end up happening early today. So remember, at the beginning of the month, going into next month, is always going to end up being a strong economic or a strong fundamental week. Now, because the beginning of the month basically ends, or the last week is basically in the same week, we're probably not going to get as much volatility as we did last month. But going into Friday, remember, we have non-farm payrolls that we have to be able to pay attention to. So overall, we'll end up paying attention to that. So let's take a look at the currency strip chart, kind of get an idea about where we are when it comes down to the market as of yet. Currently, right now, we're seeing that the Japanese yen was very strong right around that 2 o'clock time, and the Australian dollar was very weak. If you would have paid attention and got into one of those trades from there, you probably would have got a little bit of a pop, but it probably looked like this basically settled back in. Currently, right now, the strongest pair as we're looking at it is the Canadian dollar, and it's probably based off of that weakness that oil ended up having yesterday, so it's trying to retrace a little bit. But overall, every pair is kind of confined within this 20 area, so that means that there's no true winner at this particular point in time right now. So we will keep that in mind when it comes down to overall trading. Take a look at the big three and kind of get an idea about what's going on with that. If you do not know what the big three are, basically it is the U.S. dollar index, basically what we end up doing with that. We end up looking at the US dollar index, try to get an idea about what's going on with that overall trading pair. We take a look at oil and see how that is going to end up reacting towards the overall pairs and see what you want to do off of that. And then after that, we look at gold. And then after that, we take a look at the NASDAQ a little bit and see if there's any other trading opportunities to be able to get in. So first pair, we always look at the US dollar index. We want to get an idea about that. And this is what we're going to do right now. So overall, we see that the market is in the sell zone. We see that the market has went through a whole week of being able to have a bullish push. Now we're seeing a little bit of a retracement right now. As long as this market, when it retraces, as long as it does not break this overall gold line and go towards the downside, then we should be good. The second thing that I wouldn't want to happen is that I wouldn't want the market to break all the way down to 11,969 and be able to push from there. If you look at it, we're going back from past resistance equals future support. Overall, in this area, we can get rid of this R5 movement. That doesn't matter anymore. I'm gonna show you a box and kind of represent that. If we look at this overall area, I'm gonna put it in bright orange so everybody can be able to see it. If you look at it, this was the past resistance that we ended up having before, where the market was at 12,000, and the market was basically bouncing off of it, and you couldn't break through that overall level. Now we're basically back at that same level, and I'm wondering if the market is just going to hover around this overall area and find it to be support and then start to push up to the upside. Now, if we're looking at this overall position, I would actually want it to fall a little bit more. The reason why I would want it to fall a little bit more is because if we look at where the market is, it's really in the sell zone. It's coming from the sell zone. So if you want to be patient on this pair and allow this market to be able to give you a little bit of a retracement, the only way that you can be able to do that is by being able to have more people look to be able to sell on the dollar. And that is my overall hope that I would like to be able to see for the next couple of days. Now, I don't want it to, I don't want the bottom just to fall out, but I do not want the market to be able to break this overall trend line as of yet. If that happens, then that means that it's done moved too quickly. And overall, yeah, you'll have people looking to be able to buy, but quite frankly, I'll probably be a little bit more hesitant when it comes down to that overall move. So we got a counter trend line break to the upside. We have a counter trend line break to the downside. We're looking for this market to be able to keep on pushing towards the downside. And then after that, later on going into next week, look to be able to break out, retest, and then after that, give us a move from there. And that's the move that we're looking at being able to get into. The lower the price that we end up getting, the better the value when it comes down to the overall number that I would love to be able to get to and be able to trade long term. Hopefully that makes sense when it comes down to that. So still not looking at any type of trade for us buying. And quite frankly, if I could find something for us selling, then I would look at that for an opportunity, but it will be only a quick scalp of an overall move. Looking at oil, remember we talked about this trend line and we ended up getting that trend line break. That was a huge breakout moment, and I wish I would have paid attention to the charts when it happened. But remember, we were talking about this market was in a no trade area, meaning that even though it was coming from the sell zone, and even though we end up having this move for basically about $2 a barrel of this overall move overall, I wasn't necessarily interested until the market ended up breaking the trend line. Because the market broke the trend line, now it goes from an R6 to an R2. And because it's at an R2 now it's in a push zone. Now we can be able to look at being able to make a trade toward the downside. Now, remember, this is a breakout. Remember, you always look to be able to, when you trade a breakout, you're always looking for a retest of the move before you look at being able to get in. Once that happens, then you have an opportunity of being able to trade and trade with confidence. Now the market got up to the 618 before, so it's in a very healthy position for it being able to break. But currently right now, what I'm looking for off of the 2 hour is, can we be able to get a higher price off of this move? And then after that, look to be able to sell. Sometimes you're able to, with this bullish and with this bearish engulfing candlestick, maybe we might be able to, but I see that we have a little bit of consolidation in the form of a triangle right here, right now at this particular point. So it may end up having a little bit of consolidation. Typically, when a triangle is formed, it typically breaks out in the area of the previous direction. The previous direction was down, so we should see that this market should move down. So we are paying attention to this movement to where it moves towards the downside first, and then after that, and take the trade from there. But this is one of those trades to where last week we were looking at. We go back to the daily. Last week we were looking at being able to trade this all the way down to $31 a barrel. We are still in that position where I think it's a very good trade to be able to look for. But I would like the market to be able to push up a little bit more and test the backside of this trend line a little bit more before actually pushing down on the 2-hour. If you get that opportunity, then after that, take the trade. If you don't get that opportunity, then after that, obviously, just find another pair and be able to go from there. All right, so that's what it is when it comes down to that. Gold, same deal. We have a breakout for the downside. Now we're looking for a retest. From this retest, we have a counter trend line break right here, but the market is still in the buy zone. We don't sell in the buy zone. So I don't like this overall position. It's not a high probability trade, even though the market is showing signs of being bearish at this particular point. So what I would do for being able to look at this and trying to make a decision on if I'm going to end up getting in is that I will move this overall trend line just a little bit toward the outside and allow the market to be able to breathe. I would love to be able to get into this market when this market ends up giving you a horizontal line or a retest up here compared to taking the trade down there. This is a false break to me. This is more of a confirmed trade if you end up getting it up here that you can be able to do. So gold, I'm off the table when it comes down to doing that. Maybe I might be able to buy it if you look at a low price and be able to go from there. But we already seen that the direction of highest probability is more bearish. So quite frankly, what I would look for is something like this. Something like being able to trade this upside movement and go from there. Now, remember previously, last week, earlier this week, we ended up talking about this move, breaking this trend line and being able to buy it up to the 1900 level. Well, we got exactly what we wanted. And if you end up trading that, then obviously you've already cashed out on your trade. And quite frankly, you're looking for a different trade right there. So overall, if we're looking at that and we're just thinking about how that actually ended up moving, this is a green day for us, the people that end up trading that overall move. Congratulations to you for being able to trade that overall position and being able to catch it to the upside. We expected that the market was going to end up going to past support equals future resistance. And now we end up having that spot to be able to go from now. So congratulations when it comes down to that overall move. Now, let's not celebrate let's celebrate our wins for a quick second. And then after that, let's get right back into it and find another trading opportunity. All right, so that's where we are when it comes down to that. Nasdaq 100 took a loss on this pair a little bit earlier this morning. And I'm going to tell you why I ended up taking a loss and kind of disappointed, but there may be another opportunity for being able to get in for buying, and that's the reason why you have good equity management. If you notice, this market has broken trend line toward the upside. Had this morning star, had this very big bullish movement. And typically, remember, when you end up having some type of candlestick formation, the market basically retests. Well, it didn't necessarily retest the next day. It had a full bullish movement. Currently, the market right now is retesting at this particular point. I took a buy right before the overall debates end up happening, and the market ended up pushing up to the upside up here and gave us this strong wick to the upside. And then after that, not even 20 minutes later, popped right back to the downside and took us out of this overall trade. So that Fibonacci is taken out. The market is still right now, when it comes down to retracement areas, right now is at a 236 and never hit the 382. Currently, right now, it's resting against the 200 and the 50-day moving average. We don't have a counter trend line break as of yet. If we want to be very cautious about it, we can look at it in two different ways. We can say that we want to be able to trade this. We'll have to be able to break past this overall area right here. If it breaks past that area, then we're good for it being able to trade it to the upside. But right now, I know that the market is in the buy zone. We had an opportunity to be able to get in. It was an 83% chance of being able to win on this trade. If I would have got out a little bit earlier and not allowed the market to be able to hit my overall the extension, probably could have broke even. I know some of my traders actually ended up breaking even on this trade because they got out very early, or they seen it when it was actually happening. Me personally, I'm a swing trader, so I let the market kind of play out itself and then go from there. And I wasn't able to get in front of that. So it is what it is when it comes down to that. So I took a small little loss on that one. Let's take a look at some overall trading pairs. The one pair that I'm interested in more than any other pair right now at this point is the US yen. The reason why I'm interested in the US yen more than anything else is because out of all of the markets, when it comes down to pairs that are trading against the overall dollar and faring very well and seeing dollar weakness this beginning of this week, we're seeing that the Japanese yen is actually doing the complete opposite. It's not doing very well against the dollar. And the reason why it's not doing very well is because obviously we had a triangle breakout. The market ended up going back down to support, which was basically right around that 104.50 area, and then popped right back up. So there's two scenarios that are basically happening right here. Either this market is in consolidation and the market's going to end up popping up to 107 and then try to pop right back down, where you have your resistance, you have your support, your resistance, your support, and then after that it should be pushing back up to resistance again. Or we're looking at a move that, because it's in a sell zone right now, possibly may fall down right around the 106 area where this triangle was, and we're going through a second phase of overall Fibonacci swings. And quite frankly, I'm not going to make a trade until I know what actually happens from there. So we're looking at this overall move and kind of getting an idea about what's happening with it. I can delete this one. Once we end up getting a counter trend line break to the downside, then I'm interested in being able to trade from there. There's a point of control on this one right around the 106.18 area off of the 2 hour. And if you're able to I had a pending sale up there at first. I want to see how this market kind of reacts. I do like the position of being able to get in at 106.18. The stop loss is very tight when it comes down to that overall move, but I do like the overall thought process of being able to get in at 106.18 if it does move up there. Now, if we're looking at that overall trade, our stop has to be just above 106.54. And I'll put it at 106, maybe 106.65, somewhere around there, because if this market is in consolidation, I want to take a smaller loss and then be able to catch it right around the 107 area if that remains to be true. But kind of going back to what's happening with gold, we're looking at this market breakout. This market never retested, so this is the retest of this overall move. And I'm looking at being able to get into the sale right around the 106.17 area and seeing how the market's going to react off of that overall movement. Which means that we'll probably see the market get up to right around the deep H6 position before falling down. Now, what's significant about the deep H6 is that that's the highest probability of risk versus reward that you can be able to get. I mean, yeah, that's a high probability risk reward that you can be able to get. Now, there are opportunities that you could lose on that one, but overall, if you end up catching that at H6, you can be able to see that you have a high probability of being able to make it if it ends up turning around to your overall area. Wes, what's going on? Hope everything's going well. You want to take a look at what we're doing on our actual charts, you can go to Trade with Travis on YouTube and be able to see what we're doing live. Looking for this position to go up to 106, 106.17. I do have a pending sale that I'm interested in being able to place in, and then after that, looking at being able to sell once it goes down there. I would love confirmation of a counter trend line break before that happens. But overall, that is a point of control area that I am looking at being able to go to. All right, so let's take a look at the euro versus United States dollar. When we take a look at the euro versus United States dollar, currently right now, remember we have a breakout that ended up happening. The market never hit the D extension at this particular point at 1.1593. But overall, we see that this market has broken to the upside, has given you a retest area. And what I'm getting ready to do right now is that I'm actually getting ready to turn my automated systems on this overall pair. I am interested in being able to buy if we have an opportunity of being able to do that, because the market is still in the buy zone. Quite frankly, I don't want to be in front of the computer on being able to watch this, but I will take a scalp when it comes down to this. So I'm turning my scalping automation systems on this overall pair and looking for an opportunity to be able to buy it. If I do get it, then obviously I'll be happy about that. On the 2 hour, we should see that the market is getting closer to the buy zone. And if that does happen, we're looking for a counter trend line break to the upside and being able to trade from there. Overall, we can see based off of the 2 hour. Let's go and take a look at some 2 hour fibs and see what we have. Look at the 2 hour position. The market has went through two different phases of Fibonacci completions. Currently, right now, we can see that the market is at a 382, so the market is healthy. We are basically at an R6 area right now. We're looking for the market to be able to drop down just a little bit more. If it can go to the 1.1685 area and then after that break a counter trend line to the upside, then I think that'll be a solid trade to be able to trade up to the 1.18 area. With my scalpers, typically it only looks at being able to go out to 50 something pips. So obviously that'll be able to cover up that overall move if it does happen. For my major swing trading account, I'm not necessarily looking at being able to trade this up to 1.18, even though it's about 100 pips away. I am kind of looking more for a selling opportunity a little bit later on going into next week. But overall, I do think that there could be an opportunity of being able to buy the euro versus the United States dollar if there is a counter trend line break. The daily is in the buy zone. Obviously, the weekly's in the weekly's up, so we do have trading alignment. So I think that would be a pair to be able to scout the market with. So that's the overall trading plan with that one. Look for a counter trend line break, and then after that, we'll go from there. Did you already go through NASDAQ? I'm currently in a buy. Did you just get into a buy? I got stopped out a little bit earlier I got stopped out a little earlier, right around, I want to say 2 o'clock this morning. I like the position of buying, but I'm waiting for a counter trend line break opportunity to be able to get in. Oh, excuse me. Yeah, so I'm looking for, so you're already in profit. Nice. So what I would look for is this. You must have caught it right when the market ended up bouncing off of the 200 and the 50-day moving average up there. Currently, what I'm looking for, because I ended up getting stopped out on my position, I'm looking for a counter trend line break to the upside off of the 2 hour. I may go to the 15-minute just to kind of get it a little bit closer and look for a breakout and then a retest. And then from there, the overall goal, if the market is going to remain to be bullish, will be trading it up to 11,721. And then after that, making sure that you can be able to capture profit while the market is actually going through that overall area. The 2 hour fibs that I had when I was looking at being able to trade it to 11,600 ended up getting broken a little bit earlier today. So I'm waiting for I'm waiting for a better position to be able to get into. Hopefully that helped you out. And if you're looking at my chart online, you can see what I'm talking about. I'm looking for this counter trend line break to the upside. So might end up going to the 15-minute and kind of getting a better idea about what's going on with it. Let's see. Yeah. We can see that it's resting right above this overall trend line right now. And we can see that, quite frankly, it's about to react with this overall trend line off the 15-minute. Now, the stochastic is a little bit overextended. So you may end up seeing it bounce to the downside. So I would look to kind of protect my overall profits if it does reject. But if it doesn't reject and it pops to the upside and it gives me a retest, and I'm going to get in the market. In your case, if it does reject, then I would kind of keep my eye out on it and kind of see what's going to end up happening based off of that move. But the 2 hours in the buy zone, and with the 2 hour being in the buy zone, you're talking about 1 to 2 days of bullish movement that should be expected. So that's what I'm looking for. Matter of fact, while I'm talking about this, let's go ahead and set my alerts. Okay, good to go. So I'm set up. So when that happens, then after that, I'll be ready to go. Let's take a look at the Australian dollar, United States dollar. I got a couple more minutes. On the Australian dollar, United States dollar, remember the market ended up hitting the D extension. Market ended up moving about 391 pips of that overall movement. We end up having our best trade of the year based off of last week's movement. Based off of that, now we're waiting for the market to be able to give us a retracement. Currently, the market is in the buy zone, and with the market being in the buy zone, we're looking for a trading opportunity as the market basically rises up in price. Now, because the market ended up hitting the 382, currently right now the market is in that R6 position, meaning that it's not necessarily the best trade to be able to get into for its buying. It will be a better probability for it being able to wait for its selling, for it being able to get in. But if you are scalping the market, if you're only going out to 20 to 30 pips, then maybe it might be an opportunity if you look at a 2 hour buy zone type of trade and be able to go from there. Currently, I'm seeing a indecision type of movement earlier today as of right now. And hopefully that doesn't lead to a counter trend line break to the downside, because even though the market ended up going to the 382, you have a good one. Currently the market is at 382. I do not want to see a decision candlestick going to the opposite direction or going bearish at this particular point. I don't think that it's ready yet. or at least I'm not ready for it to be able to get to that point yet. But remember, the market will do what it wants, when it wants, and how it wants. But overall, anything above 72, I think, will be a very good area for it being able to sell. 72.15 is where I got my eyes out for us being able to sell toward the overall position. If we can be able to get that, then that'd be great. If we can't, then that means that we just need to kind of roll with the punches and kind of go from there. But we go to the 2 hour and kind of get an idea about what's happening with this market as we speak. You can see that this market is in the buy zone. And if it is in the buy zone, we get a counter trend line break to the upside, then we could look for scalping opportunities. Along with the United States dollar, I am going to turn this one on as well. I may turn on the New Zealand dollar one. Let's look at the currency strap beta chart and see which one is up right now. Okay, both of them are basically in the same position for us being able to go up. So see which one would I be more inclined to be able to do. New Zealand dollar was Carolina King. What's going on with you? I hope everything's going well with you. Reggie, I hope everything's going well with you. Looking for a counter trend line break towards the 2 hour. If we end up getting that counter trend line break towards the 2 hour, then I like to buy trade towards the upside. The market is in the buy zone. If we're looking at this overall fibs, we're looking at scalping the market currently right now. What I would look at is the market's done went to the 382. Because the market has went to the 382, the market is considered to be healthy because there is a counter trend line break at this particular point. Or, well, it's not one yet, but once a counter trend line break happens to the upside, I will look at being able to buy the Australian dollar to the upside up to 72. Now, once again, there goes the confluence that we was talking about. We expect that the market is going to go up to 72. And if we look at our fibs are basically saying that the market is going to go up to 72, which means that that is a high probability trade for it being able to trade it and basically trade that to the upside. Now, once again, I'm not interested in being in front of the computer on this one. I want to, and obviously I am a teacher on this one. And instead of me trying to guess and try to see what the market's going to end up being on this one, I'm actually going to turn my scalper, my automated system on this trade as well, and see if I can be able to have it catch that move for me and be able to go from there. And then after that, we can be able to make our decision on what happens from there. So there it is. If you are interested in being able to buy it, what I would do is this. I'll wait for a counter trend line break to the upside. Once that happens and have confirmation, then I will look at buying up to 72 for the overall move. Currently right now, that take profit value will end up being up at, will be right around 80 something pips. So since it's 80 something pips, you would love to be able to place your stop below the A. If you do that, then that means that you're not going to end up, would not be the trade that you'll want to be able to take, because it will be a risk of 90 versus 70. The next thing that you can be able to do is place your stop below the swing low, which is right around 71 as a overall number, which means that your risk would be about 31 pips. That makes it a little bit tighter and makes it a little bit of a riskier trade. But that is a 2-to-1 if you decide to be able to take that trade. So I'm going to place it in as placing your stop just below the swing low. The stop would be at 71. If you're interested in being able to go for that, the take profit will be at 72. The current entry is pending because you're waiting for a counter trend line break. Once you get that counter trend line break, then after that you have a upside move or upside trade that you could be able to take. So keep that in mind, and we'll go from there. Last pair before I have to get out of here. We take a look at what's going on with the New Zealand dollar versus United States dollar. All right, here we go. New Zealand dollar versus United States dollar. Market is in the buy zone, kind of like every other pair for the United States dollar. We do have a counter trend line break. We had a huge move to the upside. The only thing that I just don't like is that every time that this market ends up pushing up to the upside, we're starting to see a lot of people take out profit right off the top. And to me, that's a little worrisome. The market is in the buy zone, so we should see that the market should start to push up. I am interested in being able to sell at 6,700. This market has not hit its 382 position yet, which is at 6620, which is a very safe trade at this particular point in time. If I am looking at scalping the market, it would be towards 6620. for us being able to get in. Let's take a look at the 2 hour. We take a look at the 2 hour. The market has hit the extension from a up fib. Currently, right now, we're looking at a sub up fib, and overall, there has not been a counter trend line break at this point, so I would not look at being able to trade it to the upside as of yet. So overall, what I would possibly end up doing, what I think will probably end up being a smart thing to do, I will keep my my Australian dollar trade up, and I will keep my euro dollar trade up for its automation. I keep my eye on the New Zealand dollar for its being able to scalp. If that does happen, then after that we're good. But we still are in this long-term 2 hour down fib, so we're waiting for the market to be able to push up on the long-term 2 hour down fib. We see that the market has went up to the 382. So this is a little bit more of a riskier trade if we do decide to be able to take it. But it is giving confluence of saying that this market is going to move up to 66.40 if it does push up to the upside. I am interested in being able to sell it once the market gets to 67. So we are there when it comes down to that position. So with that being said, that is my time for today. I hope everybody ends up having a good time when it comes down to that. If you like what we end up doing, please make sure that you like the Carter Cow Capital business page. Please make sure that you end up going to Carter Cow Trading on my Facebook page. Sorry. Please make sure that you go to Trade with Travis on YouTube and subscribe and hit that post notifications and send it over to somebody that you think that might be interested in being able to learn how to trade. We often end up having webinars and boot camps at the end of the month, kind of like what we have going on this month. And obviously, we end up doing private sessions each and every day for people that are interested in being able to learn how to be able to Forex trade. Like always, I do appreciate your overall time. Believe in yourself. Change will end up coming. And like always, plan your trade and trade your plan. I see each and every one of y'all